Greetings everyone. Coming back to continue on the fringe benefits in this session, let us proceed. After knowing that how fringe benefits are so important in order to maintain the quality and the work-life balance, let us come to the variety of the fringe benefits that are available for the employees, that is interest-free or maybe concessional loans, or holiday enjoyments, free food, gifts, credit card expenses, club expenses, use of movable assets and transfer of movable assets, etc. We are going to understand them. There are certain rules which I tried to just bring them on a single chart, but we will discuss them in detail individually. To begin with, the first item on the chart, that is interest-free or concessional loan. Actually, the interest-free or where the employer or any other person on his behalf has availed or the interest-free or concessional loan to the employee or any member of his household, then the value of benefit shall be determined, maybe keeping these things in mind, as we see as you see before yourself on the slide, point A and point B and point C. So first they say that where the amount of the loan is aggregate during the previous year, it does not increase rupees 20,000. That means if the amount of loan remains within the limit of 20,000, the value of perquisite remains nil. That is, if it is till 20,000, the value perquisite will be nil. That means it is not taxable. Here, suppose the loans are, sometimes the loans are made available for medical treatment in respect of disease specified in Rule 3A. Example, suppose an employee is or his family members, they are suffering from cancer or tuberculosis. In these cases, again, the value of the perquisites are taken as nil. So for any medical treatment, the value of perquisites are taken as nil. However, the exemption here shall not apply to so much of the loan as has been reimbursed to the employee under any medical insurance scheme. For example, here as it says that an employee has taken a loan from his employer of rupees maybe 1 lakh for cancer treatment. Now he received rupees 40,000 under the medical insurance scheme. The benefit of interest on 60,000, that is, 40,000 will not be taken into consideration because he is getting it reimbursed from insurance policy. Only 60,000 will be treated as tax free. Otherwise, remaining 40,000 which he received from the insurance policy will be taxable. He will have to pay the taxes on this. Okay, so this part has to be taken note of. This example is there before you, which must be which clarifies that how what part has to be exempted. Then we come to the third part, that is third criteria, that is loan for any purpose except which has been discussed above, that is medical purpose or maybe within 20,000 limit. Then the value shall be the sum equal to the interest computed at the rate charged per annum by the State Bank of India, as on the first day of the relevant previous year in respect of loans for the same purpose advanced by it. Okay, it has to be the same purpose that has been advanced, and the interest shall be computed on the minimum outstanding monthly balance advanced by the interest, if any, actually paid by the employee or any member of his house, maybe that has to be taken up. As the explanation goes, that maximum outstanding monthly balance means the aggregate outstanding balance of each for each. Okay, so this has to be the third point will be taxable with certain specifications. So this was about the interest free or concessional loan. Next, we come to holiday enjoyment. Holiday enjoyment is then when the value of traveling, touring, or accommodation, or any other expenses which are paid for or borne by the, or maybe it is reimbursed by the employer for any holiday which are availed by the employee or any member of his household. It shall be the amount of expenditure which is incurred by the employer in this behalf. However, this rule shall not apply to LTC. Please remember that. Don't mix them together. Okay, this rule will not apply to LTC under section that we have studied in the previous sessions. Secondly, where such a facility is maintained by the employer and it is not available uniformly to the employees, maybe the value of the benefit will be taken to be the value at which such facilities are offered by other agencies to the public. It means that if such a facility is maintained by the employer and it is made available to all employees uniformly, then the value will be value of the benefit shall be taken as nil. For example, suppose if the employer is sending on holiday to a trip for a week to his employee, okay, and there it is sending them maybe by collectively taking the tickets, buying the tickets for them, and is spending on booking for them. But then in that it is collective, it is sending the complete group of the office or workplace. In that case, it will be taken as nil. Otherwise, if it is availed individually by a person with his family or individually, then that is chargeable to taxes. Then thirdly, where the employee is on official tour, obviously, then in that case, all the expenses that are incurred in respect of any member of his household accompanying him, in that case, the amount of expenses incurred by the employer shall be the value of the amenities. That is, for example, if a person going on an official tour and his wife accompanies him, in that case, the amount of expenses which are incurred by the employer will be the value of the amenity, and that will be taxable. Then finally, where any official tour is extended as a vacation, then the value of the benefit will be limited to the expenses incurred in relation to such an extended period of stay or vacation. So in all, maybe we can see that the amount so determined shall be reduced by the amount, if any, paid or recovered from the employee, or if it is, and the taxable value will be only spent by the employer or maybe reimbursed by the employer. Third, we come to the free food facility. Now, free food facility, as we already discussed, that the value of free food and non-alcoholic beverages which are provided by the employer to the employee may be treated differently. In the office domain, they provide the tea, snacks, and maybe any time when you feel tired, you feel to refresh yourself, you can just go and there is a pantry or there is a small kitchen where you can make yourself a tea, coffee, or any drinks that are available there. Obviously, non-alcoholic. It has to be non-alcoholic beverages also. Then in that case, it is during the office hours. In that case, it is nil. The taxable value or the taxable perquisite is nil. Nothing will be charged. Similarly, if it is, you are working in some remote areas, some far off, maybe offshore site is there, and there you are working, and there you are provided with a free food or maybe some non-alcoholic beverages. In that case also, this kind of perquisite is free of cost. Nothing is charged from this. Then it is again, we have another provision, that is free food or non-alcoholic beverages which are provided during the working hours at the maybe in the office complex itself, maybe it is done through paid vouchers, or which are not transferable, or maybe they can be used by the employee, used by the employee by some eating at some eating joints also. Then the value thereof shall be the amount of expenditure that is incurred by the employer, as reduced by maybe anything that is recovered from the employee, and also rupees 50 per meal. That means there is an exemption of rupees 50 per meal from the company itself. So maybe they give you a voucher, or you pay it by yourself. You pay it by yourself. In that case, uh, you will be given an exemption of rupees 50. So in all the cases, what do we see? It is rupees 50 that is exempted, and obviously whatever has been recovered, that will be adjusted. So in the case of an SSE opting for default tax regime under section 115BC of the Act, then the exemption provided in respect of free food and non-alcoholic beverage provided by the employer is through paid voucher shall not be available. This has been a modification. After free food, we have gift. Any value of gift, it is from time to time, many a time the organization, the company, because of the good work or because of some festive occasion, they provide gift to the employee. Maybe sometimes also to their family members, maybe on some ceremonies or maybe some functions, personal functions, and they say that okay, whenever there is a wedding of any of the employees' son or daughter, we will be sending them this amount of gift with not means obviously it has to be a gift, not cash, where the gifts are to be given to on maybe on social or religious occasion like Diwali, Christmas, etc. In this case, an exemption is given up to rupees 5,000. Okay, so if the gift remains within the limit of rupees 5,000, it will be exempted. But if it goes beyond that, it will be taxed. So that perquisite in aggregate beyond 5,000 would be taxed as a perquisite. We come to the next fringe benefits, that is the expenses charged to a credit card. This is, the amount of expenses that is included in the membership fee. Membership fees and annual fees incurred by the employee or any member of his household, which is charged to a credit card. Maybe suppose a credit card is provided by the employer to his employee in order to meet out the expenditure or maybe pay out the expenditure that is done either for business purpose and maybe to some extent personal purpose. Then in that case, whatever the amount which is spent on the credit card, if it is either it is reimbursed by the employer, that will be the value of the perquisites. But again, we have to take into consideration the amount that is recovered from the employee will be adjusted back. That will be reduced from the total value of perquisite. But suppose if this expenditure was done purely for official purposes, that is meeting out the office requirement, maybe meeting some official meeting with the clients or with the customers or maybe with some suppliers. In that case, whatever money was spent, if the bills are provided properly, then this money is not taxable. This expenditure or this perquisite is not taxable at all, because it is this kind of expenditure that is on official for official purpose. So but if it is for personal, then it becomes a perquisite whose valuation has to be done and taxed. Next, we have the club expenditure, where the employer pays or reimburses any expenditure that has incurred maybe in the club by the employee or by the member of his household, then all the benefit that was provided through this club, that maybe for holding some meetings, maybe for holding having some recreation, or that is taken up or maybe done by the employee. In that case, this the valuation or whatever amount is reimbursed by the employer, that is taken as taxable value. So from the value so determined, whatever the amount paid or recovered will be adjusted, whereas at the same time, if the entertainment was for some official purposes, maybe some clients came from abroad or from anywhere else and now they had to be taken for dinner to that club, then whatever amount is spent, it is the office expenditure that will go to that head and not as a perquisite to the employee. So here, because all these things again and again, we have to, in all the perquisites, we have to take into consideration that whether it is for official purpose or not. And the second point that we must take note of, whether it is reimbursed or not by the, or maybe some money was got from the recovered from the employee. And secondly, whether the employer provides these facility of a health club, maybe sports, or maybe a gym facility to all the employees at large. For example, one of the floor of the office complex, it is assigned for a gym, or maybe a sports complex is developed there on that floor, just for the physical health, mental health of the employees. Then this it is provided uniformly to all. It is not an individual benefit. In that case, again, it will be an exempted perquisite. So the exemption is for in two situations or occasions. That is, one is when it is used for official purpose. Secondly, if it is provided to all the employees at large for their benefit, then it is not considered as an individual benefit. After club, we have the use of movable assets. Now, what are the movable assets? The movable assets come under the category, for example, laptop, computer system, or maybe refrigerator. Apart from car, car can also be included in movable asset. It is, where the employer provides any movable assets for the use of the employee or member of their household, then the value of the benefit will be between the 2 points that are specifically mentioned here, that is the assets belonging to the employer minus 10% per annum of the actual cost of such assets. However, the value of perquisites for an asset used for more than 10 years would be taken as nil. So that is because assume that since the depreciation rate has been charged, certain rate of depreciation must have been charged on that asset, and now maybe after 10 years it is taken up, that it is almost, the book value of those assets becomes almost zero. And therefore, from that point of view, if these assets are given over or handed over to the employee, then they will be a free benefit, a free perquisite. And also maybe suppose the same person has been working on that computer system or laptop for the last 10 years. Now, being the book value being the zero, can be handed over to the same employee without any taxable liability. And secondly, assets taken on rent or charges paid or payable by the employer for such assets. However, from the value so determined, the amount paid or recovered from the employee of such asset shall be reduced. So what do we have to consider? We have to consider either it will be if it is the owner owned asset, then that minus 10% per annum of the actual cost of such asset. And if it is rented, then what is the rental value? Accordingly, the value of the perquisite is decided and assigned. Transfer of movable asset. where the employer transfers any movable assets belonging to him directly or indirectly to the employee or any member of his household. The value of this will be calculated as per the formula that is given here. That is, first we take up the value of the computer or whatever item is that we take out, calling it the cost of that asset. Suppose if the cost of the asset is rupees, maybe suppose 20,000. From this, we will be depreciating the 10% of 50% of value, that is 50% on the basis of the written down value method for each completed year during which the asset is put to use by an employer. And if any amount has been recovered from the employee, that will also be deducted. So that means the cost of the asset minus depreciation at the rate of 50% minus amount that is recovered. The balancing figure becomes the value of that asset, and therefore if these assets, when they are transferred, the value perquisite will be computed accordingly as per this method, and the tax will be imposed accordingly. Motor car. Now here we have this motor car. The cost of the method is it's in continuation to this. If suppose it's a motor car, then the cost of that car less depreciation. In case of car, it is the depreciation is 20% and not 50% on the basis of written down value method for each completed year during which the asset is put to use by an employer. And from this again we will deduct any amount if it is recovered from the employee. So this is how it goes. And if it is apart from motor car, it is any other movable asset. In that case, the rate of depreciation becomes 10% instead of 50 or 20%, and it will be done on the SLM method, that is a straight line method for each completed year during which the asset is put to use by the employer. Again, in all the things we have to take note of that the amount of recovery from the employee will always be adjusted, and we have to accordingly find out the value of the perquisites. So these were some important fringe benefits that are provided to the employees in order to keep their morale boosted, in order to keep them more loyal, in order to attract them for their and enhance their productivity. Similar to these, there are some other fringe benefits or amenities also. So the value of any other benefits or amenities or service or right or privilege provided by the employer will be determined on the basis of cost to the employer and under an arm's length transactions as reduced by the employee's contribution, if any. But yes, exception is there to this, that is expenses on telephones including mobile phones actually incurred on behalf of the employee by the employer shall not be treated as taxable perquisite. This is one exception apart from any other amenities. So that is about all the perquisites that are there. Before moving on to the next component of perquisite, let us discuss this illustration or question and solve it out. So the illustration here, it says, I'll first read it out. Mr. X is working in a company at rupees 18,000 per month as salary. The company has provided him with a rent-free house for which the company paid a monthly rent of rupees 4,000. It has also provided him with the necessary furniture, etc., costing rupees 16,000. The electric bills are also, that is bill for electricity, they are also paid by the company, which averages rupees 500 per month. The company also provides him with the free services of the gardener, whom the company paid rupees 280 per month. The company has given a large car along with a chauffeur. Mr. X himself bears the expenses of the car relating to his personal use. He is getting rupees 3,000 per month as an entertainment allowance. He is also provided with the free lunch in the office on 200 working days, which costs the company rupees 12,000. He contributes 12% of his salary to the recognized provident fund, the company contributing an equal sum. So that means whatever he is contributing, the company is also contributing same amount. The amount of interest credited to his provident fund account for the previous year is rupees 10,000. We have to compute Mr. X's gross salary for the assessment year 25-26. So we find here quite a large number of perquisites and allowances that are given to Mr. X along with the salary. So let us work it out one by one. Okay, let us solve this question and let us put all the entries here. We will do on this part. We will solve this here. So for solution, maybe we will write computation of gross salary income because it is asked for. It is asking for Mr. X's gross salary. Income for 2025-26. And here first we will take up salary. Let us start with working with the question. So first he is working in a company at 18,000 per month as salary. So first we will take salary at the rate of 18,000 per month, which makes it into 12, 18,000 into 12, and we get 2,16,000 annual package. Then the company provides him with rent-free house, for which the company pays a monthly rent of 4,000. That means the company is paying out the rent. So that comes under the perquisite. So first we will take up all the allowances and then maybe we can take up all the perquisites. Okay. So coming to, but we will do some rough work hand in hand about the house, that is what is the perquisite, whichever what we have to take into consideration. So for the purpose of, but here we need to calculate the salary because it is in which city he is staying. It is a private company. The city according to that, and plus it is the company is already paying the rent. So here in the question the company provides him. So let us first work on the allowances. The electric bills are also paid. This is all comes under the provision, but yes, we have the entertainment allowance. I think that is there because we need that for the purpose of salary. So in allowances we have entertainment allowance, which is rupees 36,000. Because he is getting 3,000 into 12 for entertainment allowance. So this is 36,000. So here if we add it together, but first let us work out, that is 2,16,000 and 36,000. For the purpose of rent-free accommodation, we have to work on this. Because the basic definition for salary for the purpose of calculating the rent-free accommodation, we have to include the allowances and dearness allowance DA also if it forms the part of the salary or dearness pay. But that information is not available here. It's not given. So we will be including only and only the this part allowances, entertainment allowance. 2,52,000 is there for the purpose of this. And here, since they're also giving him a car, he is provided free lunch, he is provided also RPF. Okay. As no information, no other information is given to us regarding the population of the city or the size of the city, we will be assuming it to be more than 25 lakh and we'll be working it that way. So if the population is 25 lakh, we consider that this value for rent-free accommodation as maybe 10% of this, that becomes 2,25,200. The 10% is 25,200, or the rent that is paid, rent paid, because it is the building, the house that is provided, it is on rent. Rent paid is 4,000, which is given here. This is 4,000, so it is 48,000. 12 fours are 48, 48,000. And we say whichever is less will be taken as the value of perquisite. And since this amount, that is 25,200 is less, that will be taken up, and then we have to add 10% of rupees 16,000, because this 16,000 is the furniture, and he said it has furniture etc costing him 16,000. So that means this furniture must have been also on rent, and therefore whenever it is like that, we take 16,000 furniture into that is 1,600. So we add, this is the amount 25,200 plus 1,600, adding the cost of furniture. Okay, coming to solve this example or illustration here, let us do this on this side. So the calculation of gross salary. Gross salary of Mr. X. So the first thing is the salary that he is getting per month. This is rupees 18,000 per month at the rate of 18,000. So 18,000 into 12, and we get the amount as 2,16,000. To this we will add entertainment allowance to get a base for the calculation of rent-free accommodation or car, etc. So here it is, entertainment allowance is rupees 3,000 per month. So it is 3,000 into 12, and this makes it 36,000. So for the purpose of this, the total salary we get is 2,52,000 for the salary. Now let us find out the rent value of rent-free accommodation. Now 5 lakh 2,52,000. 10%, first we will take 2,52,000. 10% of 2,52,000, so we get 25,200. We'll compare it with the rent that is paid by the employer, that is 4,000 into 12, which is 48,000. the minimum of the two, least of the two will be taken up as this at RFA, and here RFA value is 25,200, plus we will add the furnishing cost, because the furniture along with this is provided to him, the necessary furniture costing 16,000, and since no other information is given, we will assume it to be bought, and if the furniture is owned, then 10% of the existing furniture. So 16,000, 10% is 1,600, and we add it together, we get 26,200 RFA. Okay, this is how we are going to calculate the value of rent-free house or rent-free accommodation. Then the company is also paying the electricity bill, and the electricity bill is also paid 500 per month. That means the electricity is at the rate of 500 per month. So for 12 months, it makes it 6,000. Okay, after that, there is a free lunch also he is getting, because provided him with free service, gardener also, and free lunch in the office on 200 working days. So value of free lunch will be, because here it will be 50 rupees, 50 will be deducted from per meal, it will be deducted, so that has to be computed also. So the total value is, or we will write free meal, a free meal where it will be free lunch or meal, whatever it is, for the complete annual basis, we have it 12,000, from which, because the point here says that he is also provided free lunch in the office for 200 working day, which costs him 12,000. Okay, and the exemption that is given is 50 rupees per day. So 50 rupees per day, that means 50 into 200, so that makes it 10,000. So that is an exemption out of the cost total expenditure, which was 12,000. We deduct this 10,000, sorry, and the taxable perquisite is rupees 2,000. Similarly, we come for the valuation of car. Let us come back to the point. It says that, where is it? The company has given him a large car along with a chauffeur. He himself bears the expenses of the car relating to personal use. So when it is a large car, first of all, and he is being given the chauffeur also. Here the amount of perquisite for him will be, and he himself is paying out the money. So here it will be 900 plus 900, because he himself is paying, so it is the rate is 900 rupees. For chauffeur extra, he is getting 900, and the total will be multiplied by 12. That is for the 12 months. So this comes out to 21,600. 21,600. Then we have one more point which says that he is also having a gardener service, and he is paying for him 280 into 12. For this 12, we get 3,360 rupees. And these are all the perquisites. I hope there's nothing else. RPF, we will make adjustment later on, but for now we have here the total comes out to be, if we just add them together, it is 67 and 1 oh, So the gross salary income, it is the gross salary in this question comes out to 3,11,000. 600. Okay, and as the employer's contribution to RPF, it is not more than, since it is not more than 12% of the employee's salary, and therefore it will not be included here, and no rate of interest on provident fund is given in the question along, so nothing will be taxable on annual accretion. So I hope this is clear, that this was a comprehensive question. I've tried to put in as many as perquisite possible to explain it to you, that how we are doing it. So that is all for this session. Thank you.